Welcome back. Now in January of 2016, the markets were crashing and many people said that it reminded them of the crash they saw in 2008. The panic was quite perceptible across world markets and emerging markets were especially hit due to China's currency devaluation. In a jaded market scenario, we issued this chart to our subscribers just after market close on 20th of January. You would quickly recognize this as an ending diagonal pattern or the falling wedge. The price action at the end of the day on 20th January is typically how a throwover is expected to behave. In cases like these, when throwover action is complete and the prices move back and close above the trend line T1, you can actually ignore to wait for a confirmation signal, which, as you would remember, happens at the break of line T2. For aggressive traders, it is possible to treat this price action around the line T1 itself as a confirmation signal and act on it immediately. The stop loss should be kept just below the end of leg phi. While this may sound easy, often it takes a lot of courage to execute such a trade, and here is why. These are snapshots of some of the articles from local news in the country on the 20th January evening. The first media house is carrying a financial news on a non-financial website. It clearly says that the global stocks have been whacked by oil tumble and bear confirmation nears. So you see, a non-financial media house is not only running a financial news, but it is also acting as an advisor for the general public by signaling that a bear confirmation nears. Here is another non-financial media house covering this news. After the markets closed on 20th January in the emerging markets, there was a big sell-off on the Wall Street. So another non-financial media house is covering this news, which says that there has been a big sell-off on Wall Street, and also the emerging market index, that is the Sensex, gives up the Modi momentum and falls to 2014 levels. It is clearly referring to a politician whose arrival led to a major rally in the stock markets, and it is pointing that there has been a loss in the momentum which was generated due to the election of this leader. Now, while articles related to movement in stock prices or stock indices may be normal in the financial media, but in this case, these articles started appearing on non-financial media, which in fact rarely report any financial news. However, this is not all. There were also comments like the ones shown here appearing across financial and non-financial media. These comments were mostly made from retail investors, and the sheer number of negative comments were overwhelming. All this should tell you enough about how negative was sentiment in the market. This is why it would make it hard for you to execute such trades even if the pattern is signaling otherwise. It is why trading this pattern may sometimes require a lot of courage. But as you start trading using this pattern, you'll find that such extremely bullish or bearish sentiment are not uncommon around this pattern. In fact, the likelihood of this pattern being profitable in such times goes up manyfold, as not many people think that the markets can reverse their trend, which is why all the buying or selling that many people expect to happen is already exhausted near the completion of this pattern. This is so because everyone just throws in the towel and a sentiment extreme is reached. These sentiment extremes should be seen as confirmation signal and should in fact encourage you to take the trade. Now, coming back to our example, here is what happened in the next few days. In 10 days, what seemed like a very bearish market rallied by over 6% and hit the target zone in accordance with this pattern. If you were not paying attention to this pattern and trading according to news or fundamentals, not only would you have missed the rally, but you may even have been caught short in a rising market. Now that we have covered examples in dollar index and an emerging market index, in the next lecture we are going to see what this trade setup is saying for gold prices in 2016. See you in the next lecture.